Hey there, Ed McCormack here, founder of the crypto education platform Dchained. In today's video, we are going to talk about a massive event that's coming up around mid-July that could flip the crypto market on its head and ultimately lead investors to huge returns by the end of the year. And we're going to talk about all of that right now. So, to start off, I want to just take a look at the last 4 to 6 weeks. And at the time of this video, it's around mid-June of 2021. And in the last 4 to 6 weeks, we have had a hell of a roller coaster. We've seen all of the pressure to sell coming from concerns around the environmental impact from crypto mining to potential threats of regulation and restrictions in China, or just general concern in the market given all of the volatility. A lot of investors get worried when it goes up and down, up and down. So it ultimately has led to a lot of individuals to pull their money out of the market and sit on the sidelines and wait for a little bit of stability or upside to emerge. And that's why I'm thrilled to tell you that in about 4 weeks from the time of this recording, Ethereum is set to launch its major multi-year, highly anticipated upgrade called London. Now, I won't go into the technicals of this and of why that upgrade is so important, but I'm going to cover two things here. One, I'm going to talk why this is important for you, both as an investor and someone who may do transactions and trade on Ethereum. And the other is I want to give you my prediction for where the price of this will go by the end of 2021, roughly a little over 6 months from today. So, talking about why this big upgrade is so important, you have to look at where a lot of the pain points have come with Ethereum, especially given all of the new investors who have come into this space, along with the rise of this whole new sector called decentralized finance. And the pain point has come down to really two main areas. One is speed. It's incredibly slow. It takes forever. And part of the reason that it's incredibly slow is because it's incredibly expensive. Over the last year, with more applications being built and more money flowing through Ethereum, the miners have made a tremendous amount of money. And you probably recognize this because if you've ever tried trading in the middle of the day during the work week, you could see that the price of doing any type of transaction, of any type of trade, can go to $200, $300, even more than $400. And it gets people thinking, well, this is the future of finance. Is it really all about paying $400 to send $50 to a friend? Probably not. So ultimately, what it created was a scenario where the Ethereum community came together and decided we need to address the elephant in the room, which is the transaction fees. Aside from making it more scalable and being able to do more transactions in a second, if you address the transaction fees, this is going to solve a lot of the other pain points and a lot of problems that people are having. And ultimately, the solution was very simple. It was staring people in the face. Rather than having this auction-style fee structure where the miners are dictating how much they're getting paid based on overall demand, and ultimately leading to potential manipulation, the new structure is going to be even more simple. You're going to have two different costs built into the fee. You're going to have the base fee, which is paid out to all of the miners, and they keep a portion of that base fee, as well as the tip, which is, as more transactions happen throughout the day, they get paid a little bit more. A little bit more. Not $400 more. And why this is important is that the portion of the base fee, the majority of it, is actually going to get burned, so taken out of circulation once it's paid on your transaction. So it works like this. Let's say we pay a transaction fee of $1, and 80 cents is the base fee, 20 cents is the tip. And of the 80 cents in the base fee, let's say half of that goes to the miner. So now you're looking at roughly 40 cents that now is taken out of entire circulation for Ethereum's supply. And that's really exciting because if you think about this, we are about to face a perfect storm. We have a scenario where decentralized finance is only growing, so you're going to have more transactions coming into the space. Institutional investors are moving a lot more of their money already into Ethereum, and we saw that with just looking at CME Group's overall options market and looking at where institutional money is putting their dollars. It overwhelmingly was going into Ethereum in May of 2021, much more than we saw with Bitcoin or Ripple or Cardano. And the last piece, aside from the fact that you have institutional money coming in, retail money coming in order to invest in DeFi, but also with all of those transactions happening, a little piece gets taken out of the overall circulation. So if you think about why a lot of investors got excited about Bitcoin, it's because it had this hard cap. It replicated the scarcity that precious metals have. Once you hit a certain cap, there's no more. But what if I told you that instead of having a hard cap, you're now just going to decrease the supply ever more as more transactions happen? Now all of a sudden, you're talking about a deflationary asset, and that gets people extremely excited. So with all of that taken into consideration, where is the price of Ethereum going to go? And at the time of this recording, Ethereum is trading at roughly about $2,400. Now, if you think about all of those factors, more institutional money coming into the market, faster growth in DeFi, and reduced overall supply, it is very easy to look at the fundamentals and the numbers and say, well, it's not out of question for this to go another 5x. The reason being is that when you start to look at demand and increasing demand with the decreasing supply, and you could draw parallels to some of the charts, especially institutional charts for Bitcoin, you could see that $10,000 is very attainable by the end of 2021. But I don't think that $10,000 tells the full story, because truthfully, I think that the market is starting to see that basing the entire direction of the crypto space based on an asset that really just its utility is to hold value like Bitcoin, it's probably not the best solution. We don't look at the economy in the traditional sense by looking at where's the price of gold. You look at it by where is the stock market, where is the utility. And given the platform for these new companies to raise capital, essentially creating a decentralized stock market, I would very quickly challenge you to think about whether this market starts to now follow Ethereum after this upgrade is made. So with a potential paradigm shift now in the crypto market decoupling from Bitcoin and starting to follow Ethereum, you now have a scenario where $15,000, even $20,000 by the end of December is certainly attainable. So that's my prediction. I think we're going to end up anywhere between $15,000 and $20,000. And of course, with more investors actually staking their Ethereum now, once this new upgrade launches, meaning they're going to lock it up into these smart contracts, reducing supply even more, I'm even more confident in that $15,000 to $20,000 range. So I hope you enjoyed this video. If you did, like it, and of course, subscribe to this channel, and come check us out at Dchained.com, where we have plenty of other videos and guides that walk through our perspective on the market and ways that you could position yourself some big returns moving into the back half of the year. So until next time, happy investing, and I hope to speak with you soon.